Picture this. For the first time in human history, gold has shattered through the $4,700 barrier, while silver simultaneously rockets to heights never seen before. Right now, as you watch this video, the precious metals markets are experiencing something extraordinary, something that financial experts have been predicting for years, but many thought would never actually happen. Whether you're an investor, a curious observer, or someone worried about their financial future, what's happening in the gold and silver markets today could fundamentally change how we think about money, wealth, and economic security. Stay with me, because in the next few minutes, we're going to break down exactly what's driving these record-breaking prices, what it means for your wallet, and why this moment might be remembered as a turning point in financial history. Let's start with the numbers that are making headlines around the world. Gold has officially crossed $4,700 per ounce, marking an unprecedented milestone that has traders, central banks, and everyday investors watching closely. But here's what makes this even more remarkable. Silver, often called gold's little brother, has simultaneously achieved its own all-time high, breaking through previous resistance levels that held for decades. This isn't just one metal acting strangely. This is a coordinated surge across the precious metal sector that signals something much deeper is happening in the global economy. To understand why this matters, we need to look at what gold and silver actually represent in our financial system. Gold has been humanity's store of value for over 5,000 years. Unlike paper currencies that can be printed at will by central banks, gold is finite, tangible, and universally recognized as valuable. When gold prices rise dramatically, it's usually sending us a message about confidence in traditional currencies and concerns about inflation, debt, and economic stability. Silver shares many of these properties, but also has significant industrial applications, making it a hybrid between a monetary metal and an industrial commodity. The fact that both are surging simultaneously tells us that multiple powerful forces are at work in the economy right now. So, what's actually driving these extraordinary price increases? The first and most significant factor is persistent inflation that continues to erode the purchasing power of major world currencies. Despite central banks' efforts to control inflation through interest rate adjustments, prices for everyday goods and services remain elevated in most developed economies. When people lose faith in their currency's ability to maintain value over time, they historically turn to precious metals as a hedge, a way to preserve their wealth against the invisible tax of inflation. We're seeing this play out on a massive scale right now, with both institutional investors and regular people moving portions of their wealth into gold and silver. The second major driver is geopolitical uncertainty that seems to intensify with each passing month. From ongoing conflicts in various regions to trade tensions between major economic powers, the world feels increasingly unstable to many investors. Gold, in particular, has always been viewed as a safe haven asset, something you hold when you're worried about what tomorrow might bring. When tensions rise internationally, gold demand typically follows, and we're witnessing this correlation play out in real time. Central banks themselves have been among the largest buyers of gold in recent years, with countries diversifying their reserves away from dollar-denominated assets, which only adds fuel to the price rally. Then there's the issue of unprecedented government debt levels across the developed world. The United States, Europe, Japan, and other major economies are carrying debt burdens that would have been unimaginable just a generation ago. As these debt levels continue to climb, serious questions emerge about how governments will ultimately service these obligations. Will they raise taxes dramatically? Will they allow inflation to erode the real value of the debt? Or will they eventually be forced into some form of restructuring? None of these scenarios inspire confidence in traditional currencies, and all of them make hard assets like gold and silver more attractive to those seeking financial security. We also can't ignore the supply and demand dynamics that are specific to these metals. Gold mining hasn't kept pace with growing demand, and finding new economically viable gold deposits becomes more challenging each year. The easy gold has already been found and extracted. What remains requires more capital, more technology, and more time to bring to market. Silver faces similar supply constraints, but with the added complexity of surging industrial demand from sectors like solar energy, electronics, and emerging technologies. As the world transitions toward renewable energy, silver's role as a crucial component in solar panels has created demand that goes far beyond its monetary function. So, what does this all mean for average people who aren't financial experts or precious metals investors? First and foremost, these record prices are a signal about the broader economic environment we're living in. When gold hits all-time highs, it's often reflecting concerns about the stability of the financial system, the reliability of paper currencies, and the sustainability of current economic policies. Even if you don't own a single ounce of gold or silver, these price movements affect you because they're symptomatic of larger forces that impact everything from grocery prices to mortgage rates to employment prospects. For those considering whether now is the time to invest in precious metals, the situation is complex. On one hand, the fundamental drivers pushing prices higher, like inflation concerns, geopolitical tensions, and debt worries, show no signs of disappearing anytime soon. This suggests that the upward trend could continue, especially if any of these factors intensify. On the other hand, markets that have risen dramatically can experience sharp corrections, and buying at all-time highs always carries risk. The wisest approach for most people is not to go all in on precious metals, but rather to consider them as one component of a diversified financial strategy, a form of insurance against worst-case economic scenarios. Looking ahead, the question on everyone's mind is whether these prices represent a new normal, or if we are witnessing a bubble that will eventually burst. Historical perspective offers some guidance here. Gold has experienced major bull markets before, often lasting years and driven by similar fundamental concerns about currency, debasement, and economic instability. What's different this time is the scale of global debt, the interconnectedness of financial markets, and the speed at which information and capital can move around the world. These factors could potentially amplify both the upside and the volatility we see in precious metals prices. The record-breaking performance of gold and silver should be understood not just as isolated market phenomena, but as canaries in the coal mine, warning signals about deeper issues in the global financial system. Whether prices continue their ascent or pause for consolidation, the underlying message remains clear. We're living through a period of significant economic transition, and the old certainties about money and value are being questioned and reassessed. For investors, policymakers, and everyday citizens alike, paying attention to these signals and understanding what they mean has never been more important. The gold and silver markets are speaking loudly right now. The question is whether we are listening carefully enough to hear what they are trying to tell us about the future of our economy and our financial security in an increasingly uncertain world. Thanks for watching, and be sure to subscribe for more insights into the forces shaping our financial future.